Imagine two investors. The first buys a stock because someone on social media recommended it. The second spends time understanding what kind of stock he's buying. 20 years later. One investor spent years chasing trends. The other built wealth. Because here's something most people don't realize. Not all stocks are the same. A Tata company is different from a startup. A dividend stock is different from a growth stock. A PSU stock is different from a private sector stock. And a small cap company can behave very differently from a large cap giant. Yet millions of investors buy stocks every day, without knowing what category they belong to. So today, we're exploring the hidden world inside India's stock market. The different types of stocks. The different risks. The different opportunities. And the different stories behind them. Because before you buy a stock, you should understand what you own. This is the complete guide to the Indian stock market. Chapter 1. The stock market isn't one market. Most people think the stock market is one giant place. It isn't. The Indian stock market is a collection of thousands of businesses. Different sizes. Different industries. Different opportunities. Different risks. Some companies are worth trillions. Others are worth only a few crores. Some have existed for decades. Others are just beginning their journey. To understand investing, we first need to understand the different categories that exist inside the market. Chapter 2. Large cap stocks. Let's begin with the giants. Large cap companies. These are India's biggest businesses. Industry leaders. Market leaders. Household names. Millions of people use their products every day. These companies have survived recessions, political changes, economic crises, and technological disruption. Because they are already so large, their growth may be slower, but they often provide stability. When investors seek safety, they frequently look toward large caps. Chapter 3. Mid-cap stocks. Now imagine a company that has already proven itself, but still has room to grow. That's the world of mid-caps. Mid-cap companies often sit in a sweet spot. Large enough to survive. Small enough to expand rapidly. Many of today's large-cap giants were once mid-caps. And that's why investors pay close attention to them. Chapter 4. Small-cap stocks. Then come the dreamers. The challengers. The future contenders. Small-cap companies. Some of them will become tomorrow's leaders. Others won't survive. This category offers some of the highest potential returns, but also some of the highest risks. Because in business, potential and certainty rarely exist together. Chapter 5. Blue chip stocks. Some companies earn a special reputation. Not because they're exciting, but because they've earned trust. These are blue chip stocks. Businesses with long operating histories. Strong balance sheets. Reliable management. And proven performance. For many investors, blue chips represent confidence. Chapter 6. Growth stocks. Growth companies aren't focused on today. They're focused on tomorrow. They reinvest profits. Expand aggressively. Enter new markets. Launch new products. Investors buy them because they believe the future will be far bigger than the present. But expectations can be dangerous. The higher the expectations, the greater the disappointment when reality falls short. Chapter 7. Value stocks. What if a good company is selling for less than it's worth? That's the basic idea behind value investing. Value investors search for businesses that the market may have overlooked. The challenge? Sometimes the market is wrong. But sometimes, The investor is wrong. Finding true value is harder than it appears. Chapter 8 Dividend Stocks. Not every company keeps all its profits. Some share those profits with shareholders. These payments are called dividends. For investors, it's like receiving rent from a property. Except instead of owning real estate, you own part of a business. Chapter 9 Income Stocks. Income stocks focus on cash flow. Investors seeking regular income often prefer them. Especially retirees. Or people looking for stability. They may not offer explosive growth. But consistency can be powerful. Chapter 10 Cyclical Stocks. The economy moves in cycles. Growth. Slowdown. Recovery. Expansion. Some businesses rise and fall alongside these cycles. Automobiles. Real estate. Metals. Construction. When the economy thrives, these companies often thrive too. Chapter 11 Defensive Stocks. People may stop buying luxury goods during a recession. But they still buy food, medicine, soap, toothpaste. Defensive businesses sell necessities. Their stability often attracts investors during uncertain times. Chapter 12 PSU Stocks. Government-owned companies form a unique part of India's economy. Banks. Energy companies. Infrastructure firms. For years they were overlooked. Yet some eventually became some of the market's biggest success stories. Chapter 13 Private Sector Stocks. Private companies often move faster. Adapt faster. Innovate faster. Competition forces them to evolve continuously. These businesses have played a major role in India's economic transformation. Chapter 14 Penny Stocks. Few categories attract more attention, or more misunderstandings, than penny stocks. Many investors see a low price and assume opportunity. But a low stock price doesn't necessarily mean value. And some of the biggest losses begin with the words, "It looked cheap." Chapter 15 Multibagger Stocks. Every investor dreams about finding one. A stock that multiplies 5 times, 10 times, 50 times, or more. These are multibaggers. The stories that inspire generations of investors. But identifying them early is one of investing's greatest challenges. Chapter 16 Turnaround Stocks. Some businesses struggle, then recover. A new management team arrives. Debt is reduced. Operations improve. Confidence returns. These are turnaround stories. Some become legendary. Others never complete the turnaround. Chapter 17 IPO Stocks. Every public company begins somewhere. An IPO. The moment a company invites the public to become owners. Excitement often surrounds new listings. But history shows that not every IPO becomes a success. Chapter 18 Sectoral Stocks. Not all opportunities come from company size. Some come from industries. Banking. Technology. Healthcare. Energy. Infrastructure. Each sector follows its own story. Its own cycle. Its own opportunities. Chapter 19 Banking Stocks. Banks are the backbone of the economy. They help people save money, provide loans, support businesses, and keep money moving through the financial system. When the economy grows, banks often grow too. That's why banking stocks are closely watched by investors. Chapter 20 IT Stocks. India became a global technology powerhouse through its IT industry. Software companies serve clients around the world. These businesses grow through innovation, talent, and technology. For investors, IT stocks represent India's digital success story. Chapter 21 Pharma Stocks. Pharmaceutical companies make medicines and healthcare products. People need healthcare regardless of economic conditions. This makes pharma an important industry. Pharma stocks combine science, research, and business growth. Chapter 22 FMCG Stocks. FMCG companies sell products people use every day. Toothpaste, soap, tea, shampoo, and packaged foods. Because demand remains steady, FMCG stocks are often considered stable investments. Chapter 23 Auto Stocks. Auto companies manufacture cars, motorcycles, trucks, and other vehicles. The sector often reflects consumer confidence and economic growth. When people earn more, vehicle demand usually increases. That's why auto stocks are closely linked to the economy. Chapter 24 Energy Stocks. Energy powers homes, businesses, factories, and transportation. This sector includes oil, gas, electricity, solar, and wind energy companies. As India grows, energy demand continues to rise, making energy one of the most important sectors in the market. Chapter 25 Infrastructure Stocks. Roads, airports, railways, ports, power systems. Infrastructure companies help build the foundations of modern India. Chapter 26 Export-oriented stocks. Some companies don't depend on India alone. They sell to the world. Global demand becomes their growth engine, and international markets become their opportunity. Chapter 27 High Beta Stocks. Some stocks move dramatically. When markets rise, they rise faster. When markets fall, they fall harder. High rewards, high risk. Chapter 28 Low Beta Stocks. Others move more calmly, more predictably. These companies often attract investors seeking stability, especially during volatile markets. Chapter 29 ESG Stocks. A new generation of investors asks a different question. Not just, how much profit? But also, how was that profit created? Environmental, social, governance. The rise of ESG investing reflects changing priorities. Chapter 30 Dividend Aristocrats. Some companies reward shareholders year after year. For decades, consistency becomes their competitive advantage, and trust becomes their greatest asset. Chapter 31 Monopoly Stocks. Some businesses dominate entire industries. Strong brands, powerful networks, limited competition. These companies can generate extraordinary profitability. Chapter 32 Compounder Stocks. Perhaps the most powerful category of all. Not because they're exciting, but because they're relentless. Year after year, profit after profit, growth after growth. Compounding quietly transforms time into wealth. Final chapter The Real Lesson. The Indian stock market isn't a collection of ticker symbols. It's a collection of businesses. Different sizes, different strategies, different risks, different opportunities. There is no perfect stock, no magic formula, no guaranteed winner. Only businesses, and the investors who choose to own them. The smartest investors don't ask, which stock will go up tomorrow? They ask, what kind of stock am I buying today? Because understanding always comes before investing. And in the long run, knowledge compounds just like money.